you're starting a business, you're one person, you're by yourself.
Sure.
It's a hard thing to do. Anybody here who started a business knows it's very difficult. You come into Wework, you take a space for $600 a month, and you're already part of a community. You have at least 1,000 other people around you that are ready to help, and because you're all part of the same thing, they're actually excited to be there.
Well, that's a great idea, isn't it? A fun place to work just when you're starting your own business and living the dream. And the cool guy selling the dream is Adam Newman. The 40-year-old founder of Wework is a human dynamo. His office-sharing company was valued at $47 billion back in January. Incredible when you consider as a kid he was so severely dyslexic he couldn't even read and write until the 3rd grade. You know, he was born in Israel, lived in a kibbutz for a while before moving to New York in his early 20s. Once there, he devoured everything the Big Apple had to offer, including capitalism. He is now, though, very much a family guy and has 5 children with Gwyneth Paltrow's cousin, no less, Rebecca. And he has $1 billion in his bank account. And now, the sad part. It wouldn't be Nexus without it, would it? He was pushed out of his company last month as investors lost confidence in him. Where did it all go wrong? Well, we'll be asking our guests in a moment. But first, a quick look at the man and his vision.
It's that community, being surrounded by a group of like-minded individuals, being part of something bigger than yourself, inspires people to work harder, spend more time at work, and just have fun doing it. Because at the end of the day, we're trying to help our members create their life's work and not just a living, and for that we want them to have an amazing experience.
Wework is a leader in the business of renting out spaces to entrepreneurs.
Wework, founded in 2010, has become one of the most valuable young companies in America.
It lets people rent out a desk or a private office equipped with amenities like internet, coffee, and spacious common areas.
They fill my soul. I feel happy being here.
They fill your soul.
They fill my soul.
Right now we're in a very high growth stage of our business, and we don't see that stopping anytime soon.
Adam Newman is also hoping to change the balance of modern life, adding apartments called We Live, schools called We Grow, and in the future, whole cities powered, as he puts it, by we.
Office rental giant Wework is aiming to go public. It's seen explosive growth, but is still losing billions of dollars every year.
These companies make no money.
This is marginal stuff, and it's being priced and described as though it was some holy grail.
Investors failed to buy into its valuation of $47 billion, or its promises of elevating the world's consciousness.
Wework isn't the only company that rents out office space, right? The reason that Wework has grown to be the large behemoth that it is that's in the news is because of Adam Newman.
Somehow this guy's been treated as some guru genius because he's such an effective self-promoter. The $47 billion was a number out of the sky.
Internal pressure is mounting to oust their CEO, Adam Newman, before the IPO.
We really want to be a company that sets an example but also lives by their own words.
This guy's buying planes with company money. This guy's buying buildings
taking out loans against his own
and then leasing them back and forth.
Adam Newman, the colorful founder of the company, is stepping down.
This house of cards was coming down.
It's a real estate company. It's not a technology company.
Wework is now officially pulling its IPO.
Holy cannoli. Has it been a rough quarter?
Well, how did it all go wrong so quickly? Let's ask our guests. We have 3 of them up there. Thron Mohammed is a tech journalist who's been following the Wework story very closely. Dr. Hersh Shifrin is an economics professor from Silicon Valley who specializes in the psychology behind investing. And boy, do you need to in this story. And finally, Adam Perlis, the CEO of his own design company in New York. He loves visiting his clients at Wework offices. You know, Adam, let's start with you. Something a bit folksy. You go there, you see your clients. What do you think of their offices? You love them, don't you?
Yeah, I mean, I can't say enough good things about them. They've created an incredible culture there at Wework. You know, it makes it super easy to be able to afford a really beautiful office space and have all the amenities that some of the biggest companies in the world do. You know, previously as a person trying to find office space, you wouldn't get those things. You might find a cardboard box somewhere in Manhattan. But here I can visit any WeWork all across the city and have all those amenities available to me for a pretty reasonable cost.
Fair enough. But, Hirsch, we're watching Adam Newman, and he's trying to come across as some sort of Steve Jobs character, that he's going to revolutionize the world of work and education and community. But he's basically renting office space. What's going on here?
I think he is renting office space. He's doing it in a way that creates value for his consumers. I think the big problem, as our guest Adam pointed out, was that it's at reasonable cost to customers. And the issue is there needs to be a financial model underneath what WeWork is doing so that it's profitable. And it was not a profitable company. And I think that what happened in the end is that investors saw that there was no path to profitability. And that's what triggered the problem with the IPO.
That's right. Theron, basically what we have here is a founder who's charismatic. He's creating value with his vision, very persuasive, but not $47 billion worth, right? And that's why they pulled the IPO.
Yeah, so the company lost $900 million in the first half of this year. We recently found out it lost nearly $1.3 billion in the third quarter. So it's just burning cash. And when it filed to go public, investors realized that it just didn't justify that valuation.
And why do you think they were able to see something in the paperwork that other investors who have already come on board with WeWork just couldn't see?
I think, well, part of it was that Adam Newman's charismatic personality, I think, was so compelling that it convinced a lot of private investors, including SoftBank's Masayoshi Son, that he was the next big thing and he was worth any price tag he could claim to. But looking at the IPO filing, they saw all these issues with Adam Newman, where he was leasing his own properties to his own company, sold the trademark "we" to his own company, and borrowed and loaned us, and sold $700 million worth of stock before the IPO.
So once upon a time, well, only back in January, really, the company was worth, they say, $47 billion, but the investors that looked at the IPO filing say it's closer to $8 billion?
Yeah, that's exactly right.
And what is the $8 billion valuation based on?
The new valuation is based on the fact that it is growing quickly still in terms of expanding offices and growing revenue, and the fact that they've, I guess, the cultural value. So a lot of WeWork's competitors, they say, this went too big and too fast, but there is some value to co-working, and they see that growing. They see that as a valuable segment of the industry.
Hersh, Adam Newman, we shouldn't feel too sorry for him. Yes, he's been pushed out of the company, at least as the leader, but he walks away with $900 million. Wow. What else does he get in his severance package?
He gets a consulting contract for 4 years. And in addition, as you said, he walks away with about a $1 billion that comes from having sold his shares in WeWork to SoftBank. And that was the price that SoftBank had to pay, given that Adam Newman had structured his original deal with WeWork so well that his shares collectively and in the aggregate had many more voting power than the other shares. So he still would have maintained, if he hadn't sold those shares, a controlling interest in WeWork. And the price was $1 billion for SoftBank to pay in order to get those shares.
Now, it may have lost its leader and ditched its IPO for now, but it is still in control of a lot of real estate. In fact, it's somehow become the biggest holder of office space in New York, Washington, D.C., and London in just the 9 short years since it launched in 2010. At last count, it has 600 offices in 32 countries, and they're estimated to cover around 4 million square meters of office space. And some people, as we've heard from Adam there, absolutely love working there.
So you've got a self-serve snack area over here. You got your Cokes, you got your Red Bulls, all self-serve, which is really cool. All of this is unlimited, so we can have free espresso, which is what you want, if that's what you're into. Otherwise, they've got drip coffee over here, all the amenities. Everyone that I've met through the WeWork community has been absolutely awesome, and all the staff here are incredible.
Wow, sounds too good to be true. Let's go to Adam. Adam, too good to be true, or is that really how it is? And how many WeWork offices are there in your city?
You know, there's too many to count, I think.
Wow.
There's basically a WeWork on almost every 10 blocks here in New York. You know, the experience, I think, is as it was described there in the video. You know, you get all those amenities, you pay a fairly reasonable cost for those things. But, you know, of course, I don't know if all of those things will continue to exist in the future.
One of the benefits that Adam Newman mentioned right at the top of the program is that if you're starting a business, you don't have to feel alone. It's a great, energetic atmosphere, and you have a lot of professionals all around who you can tap for help. I just find it quite amazing that you're sitting there and you might be able to get other people who are there doing their own job to help you. Is that what happens?
Yeah, I mean, I don't know if it goes quite to that extent. You know, the fact that you are in this community does certainly help. You know,
Right.
the fact that, you know, I'm just wandering around those offices, working with different clients, people start to spread the word, and sometimes we get extra business that way. So there is value in community.
Hirsch, they say it's a kind of a community atmosphere, and some of the, they like to call them members, by the way, not customers. Some of the members of this cult, of this business, sort of look up at Newman as if he's, you know, sort of the savior of their business. Does this start to get into cult territory at some point?
Well, he's certainly a leader. And I think that in the way he actually ran his organization, it attracted fierce loyalty. There's a story about him having taken a group of his colleagues, those reporting to him, to a building in New York that was in terrible disarray, but that he had just purchased, the top 30 stories. And they were all drunk late one night. He took them out to an unsecured ledge at the top of the building, and they all followed him out drunk. You know, a little bit of a false step, and one or all of them could have fallen off, but they followed him out there, which is what would happen in a true cult situation. So there was definitely a cult aspect to the way that Adam Newman operated.
And Hersh, to what extent did Adam Newman use trust, the trust he'd built up with everyone around him, as a key instrument to get what he wanted out of investors and so on?
Well, he was very, very effective in the way that he used trust. Trust in the way that really good con people do. There are four components to trust. The first one is friend or foe. I think he was able to convince people that he was their friend, and he used this concept of friendship very effectively. The second is integrity. And you know, the way he talked about saving the world in terms of orphans, helping the environment, generating community, all of those things led people to view him as a highly ethical person with great integrity. The third is competence. He conveyed the impression of being highly competent despite the lack of a competent financial model underneath. And finally, predictable. He created a brand. We knew what to expect from him, and he usually delivered as a great performer. And I think that all of those things blinded people to what was missing in what he was promising.
We're going to come back to that point a little later when we look at founders broadly. WeWork's property portfolio, as we've heard, is massive. But of course, Newman told investors this was not just an office-sharing company. This was a visionary company that would change the world. And that's how he convinced his biggest backer, Masso's son, to come on board.
It's a real partnership. And I think the longer we know each other, the more we can build it. And Massa is one of the most visionary investors in the world. I don't know if you know the story, but his initial decision to invest in WeWork took approximately 28 minutes, including when he got in, left, and drove in the car.
Yeah, that's the thing. Massa, the legendary investor, was absolutely crucial here. He's been running SoftBank since he created it in 1981. Well, SoftBank's Vision Fund for tech startups has so far invested $10.5 billion directly into WeWork, and now it's committed to another $8 billion to keep it going. It also backed Uber, which floated earlier this year, only to see its stock drop immediately. And where did Massa get the money for his Vision Fund? Mostly from Saudi Arabia and Abu Dhabi. Back up to Ferron now. Ferron, it must be very difficult to convince a hard-nosed investor like Massa's son to part with $10 billion, but apparently he can do it in 28 minutes.
Yep, so Son first met Newman in India at a startup event and was kind of blown away by this 6'5", good-looking guy talking so passionately about changing how the world works and lives. And then he visited him in New York, and after 30 minutes, Son invited him to get in the back of his car, and they signed a deal right there on his iPad.
It makes you wonder, doesn't it? Hersh, what do you think? What happened? He got overwhelmed by his good looks?
I think he definitely was impacted by those good looks and that height. The physical package is certainly attractive. I think he was also interested in doing a repeat of his previous successes. You may want to talk about that later, but you have two key successful people who are building things and people who are highly ambitious, people who are not only ambitious but are driven to succeed and to compete. And I think that they were both looking for something big, two big successes down the line, both risk takers. And so you had these two come together and the chemistry clicked in terms of their very strong needs.
Yeah, you're
right. I think that also neither of them was especially good at basic finance. I think that their skills were otherwise. And so they both bought into the picture without there being a strong financial model to underlie the underlying decisions.
You know, it's very interesting. It's not just the looks and the physical size, it's imposing, it's also the passion, isn't it? Massa's son said he hadn't felt so excited by an entrepreneur since he met Jack Ma in the 1990s. Now, Massa invested $20 million with Jack's Alibaba startup, and today his shares are worth $100 billion.
His eyes was very strong eyes, strong, shining eyes. I could tell from the way he talk, the way he look at, he has a charisma, he has a leadership. So his business model was wrong. It's the way he talk, the way he can bring young Chinese people following him.
So his business model was wrong, but he had shiny eyes. Let's go back to Hersh. Hersh, shiny eyes get you a long way, apparently. I mean, it's a gut feeling, isn't it, for this investor?
It is a gut feeling. There's a technical term for it called the affect heuristic. And Nobel laureate Danny Kahneman, who wrote this wonderful book, Thinking Fast and Slow, tells us that the way we think is not unimodal, that we have two basic ways of thinking, one that's intuitive and the other that is more conscious and deliberate. Most of us sort of balance these two ways of thinking in the way we make decisions, but people who are especially intuitive downplay the conscious part and overplay the intuitive part. You can be successful if you're lucky by over-focusing on your intuition. But at some stage, it's like playing Russian roulette in a way, that one day the bullet's going to enter the chamber, and so your luck will run out. But it's important to understand the difference between skill and luck, and it's usually helpful to have some conscious thinking to supplement the intuition. And my sense is that Masa-san has been very successful with intuition, but it's just in this particular case, he made a big mistake because his luck ran out.
You want to come in there, Adam?
Yeah, absolutely. I mean, I think it's incredibly important for a founder to be able to have that vision and sell that vision in, right? These companies don't just come from nothing, right? They come from someone who's incredibly driven and passionate about what they do. And, that hopefully will lead to their inevitable success. But, as an investor, you also have to look at the numbers. And, by just sort of signing on the dotted line just because you thought somebody had a great vision, that's probably not a really good business strategy.
Adam, thank you very much for that. Massa isn't the first veteran investor to be swept up by a charismatic founder with a tech vision that promises the world. This has been going on for some decades now, sometimes with good results, sometimes not so good.
Microsoft's Bill Gates, Apple's Steve Jobs, and Facebook's Mark Zuckerberg.
All are visionary founders who won the trust of financiers, and they took the value of their companies from 0 to billions. Ever since, others have tried to build billion-dollar businesses based upon their own cult of personality, but it hasn't always gone to plan. Elizabeth Holmes consciously modelled herself on her tech forebears, dropping out of college and even sporting a Steve Jobs-like turtleneck. But her blood-testing company Theranos was nothing more than smoke and mirrors, wildly exaggerating claims about their technology. And for the co-founder of Uber, the problem wasn't the technology, but the man himself. Travis Kalanick was accused of presiding over a culture of sexual harassment at Uber and resigned as CEO in 2017. Adam Newman also played the part of the charismatic founder. Alongside touting Wework's progressive values, Newman was fond of telling people he secured the company's primary investor in less than half an hour. And that investor was Masayoshi Son, the chairman of Japan's SoftBank. And after initially backing Uber and Wework, Son has now sidelined both Kalanick and Newman, perhaps spelling the end of an era for the cult of the startup founder. And it's goodbye to Adam Perlis and hello to our new guest, Digby Vollraff, the founder of his own startup called Feast It. Digby, put you on the spot here a little bit. Are you sort of a Steve Jobs, Bill Gates kind of character or more of an Elizabeth Holmes charlatan?
Hopefully neither. Personally, I'm not a huge fan of the whole kind of cult of personality. I think businesses are built by teams, and that's kind of the direction we're moving in. And I'd rather surround myself with incredible people than be totally reliant on myself.
And what about all that talk on your website of sort of, how revenue isn't enough, but it's about other values as well, the softer values, as it were? Those are still important?
Totally. I think that in the 21st century, I think millennials and kind of Gen X and Gen Z need a lot more than just a business that's going to make money. We're competing with people like Apple and Google and whoever for talent. So we need to offer them a lot more than just revenue.
Hirsch, the power of the founder, as we've seen over the past few minutes, is to create a value for their company that's beyond their fundamental worth, their intrinsic value, if you like. Now, there's lots of podcasts and TV shows about this now. Do you think their time has come and gone, or do you think they'll endure?
I think they'll endure. I think that investors these days, and I agree with Digby, are looking for more than the financial component of the securities that they buy. They are looking for something to connect to their personal values. It's called value expressiveness. And so I think that is an important part of investing these days. And the question is whether companies are able to deliver on that value promise above and beyond the financials.
Now, Digby, I know you're not looking for investment at the moment. Just imagine Theron and Hersh are billionaire investors. Give us your pitch, how you would get money out of them.
Well, the way I see it is, and the way we've always pitched ourselves, is basically the events industry in the world is worth about £1 trillion. And at the moment, it's stuck where the travel industry was pre-internet. So there's a number of gatekeepers who block access to the best suppliers in the world, and a lot of the best events can't find those suppliers. So we simply see ourselves as someone who's democratizing that process. We let people who organize events at any scale, from 1.5 million people public events, all the way down to bar mitzvahs and weddings, we let them find the suppliers they want and kind of take the pain out of that process.
Now, Theron, I know you've got your hand there on a massive wad of cash. Any questions for Digby before you invest?
I guess I'd ask if I could speak to his existing customers and talk about the market opportunity, which he mentioned, and get a bit more detail about that, and the path to profitability.
Hersh, are you feeling any irrational exuberance to part with a lot of money?
Not at the moment. I think that I'm sort of at the stage where I'm assessing the degree to which I can trust Digby as a founder, and thinking about what questions I need to ask him about the underlying business model that he has, to see whether it really makes sense as an investing proposition for me.
So there you go. Unlike Adam Newman, in 28 minutes in the back of a taxi or whatever it was with SoftBank CEO, you're actually looking at the fundamentals. So you'd want a long conversation with him. One more question for you, Digby. You're working in a co-sharing office space, but not WeWork. So what are the benefits of the place you're in then?
The place we're in is brilliant. I mean, the fundamental is its location more than anything. I selfishly like working somewhere that's about a 20-minute walk from where I live. But more than that, it's got a health studio, showers, kind of all those things. And what they offer more than normal office spaces or our own spaces, they take care of the essentials. So I'm not worried about a cleaner. I'm not worried about who's going to fill up the coffee. All of those kind of basics are taken care of for us.
And why didn't you pick WeWork? They've got a lot of debt. They need more customers.
They also charge a lot more money.
Okay. Well, there you go. Digby Volrath and Hersh Shifrin and Theron Mohammed. Thank you all very much for your analysis today. Really appreciate it. And thank you at home and on your mobile phones for watching. Until next week, goodbye.